we've seen this coronavirus play quite heavily on the stocks. Again, when you're making record highs, any excuse to get out of the top, kind of isn't a real surprise. We've seen the S&P, sell off, the gap down, the gap being closed, but the Fib's working pretty well. The Fibonacci, 50%, showing exactly where the expansion points are going to find, kind of this hourly consolidation and kind of top to the market, and then this sell-off. So I guess it's really now what we think is going to win. Is it going to be the 1%, their greed, which is off the scale, and, people, talk about record, kind of highs in the stock market's been, a continuing theme for the year. We've seen all these kind of companies, join the trillionaire club, should I say, Microsoft, Alphabet, Amazon, etc. Amazon jumping 10%. All these things still, kind of indicating there's such a massive amount of greed and money to be put into the stock. So what I would say is, again, if you're looking for, sells in the market, then obviously the S&P could break down to these lower levels. Maybe we'll look to test, kind of a psychological level like 3,000 before we actually bounce. I don't know. We're so far up in the range, it doesn't necessarily mean that, dips down here aren't good buys, because that's what the trend has been, over the last kind of 8 years or so. And, again, it's always important to put these things into context. We're looking at the hourlies now. So look how big the hourly candles are. How far can it go down before it retraces? So if you think this coronavirus is going to, be the scourge of the world and that's going to end stocks, then absolutely. It's not for me to say, what you should do. You can sell it as much as you want. There's enough room for the market to kind of go down, 4, 5, 6, 7, 8, 10, 15, 20% from these highs. But, the reality is, when you're looking at the monthly chart, this is what we've seen. The markets have had every opportunity to, consolidate close towards the lows. They've rejected it and gone higher. So, the weekly charts, again, still a very, kind of steep, kind of channel moving upwards. Again, we've seen this consolidation towards the high points, but again, it'd be a brave man or trader to call this as the top of the market, and this is going to go down when you've seen so much, kind of rejection and markets going to make record highs. So still got Donald Trump in charge. The impeachment probably isn't going to affect that. He's still going to remain in charge. I still don't think he'll do a second term, and that's just because of, I think, he'll want to go off and be himself, play golf, make some money, or spend the money he's already made out of the stock markets, I guess. So I don't think he'll do a second term, but yes, the impeachment was always a high probability against, but I still don't think he wants to work, and certainly not work for another 4 or 5 years. So again, that'll have its own implications where the stock markets have been held up by Donald controlling the Fed. But this could be the beginning of a new range where the market kind of moves sideways and continues higher, as we've seen previously in the trading scenario. But as I say, really the play about the opening next week is, do we see a gap and the markets continue lower, or do we see the market consolidate and hold above these key trend lines and continue the overall trend of making those record highs? I would say I have to keep going with record highs, because I don't think, when you've seen SARS and bird flu and all these other things in the past, they haven't crashed the stock market. So at these levels, I don't think something like that is going to be the catalyst for it. But again, you never know. So you've got the DAX, similar situation, but we've got this kind of gap formation, this island formation, which is quite a negative pattern, that when you see it, kind of lends you to selling the market, when we're still pretty high in the range. So again, similar kind of scenario. We're below 13,000 now, psychological level in the DAX. So could see the market push, quickly lower to these, weekly points of resistance down here. Maybe down to 12,444, perhaps. Again, but it's check the speed of movement and how much it isn't retracing. That'll tell you the direction of the market. If the market isn't pulling back and people aren't taking longs into these shorts, then the market will continue lower. So again, I would say opportunities to sell the DAX. If we do continue, this theme of the world's in trouble because of this virus, because of the technical setup is here. And I think, although I don't necessarily think the DAX is more of a sell than the S&P, because it's not higher. I think obviously the implications of the UK leaving the European Union, which one up on the FT told them it was going to happen, and it did. So yes, we can finally say that the UK has left the European Union, but the DAX is part of the European Union, and something's got to give. There's got to be a winner and loser out of that situation, and I think everybody loses net between the UK and Europe, but there will have to be someone who comes out stronger. So as I say, I think the DAX could be under more pressure, economically, and because of the European Union situation rather than this coronavirus. But as I say, stocks have looked a little bit negative, but every time we've seen negative, we've seen those big old bounces. So again, position yourself if you can be market neutral, so sell into the weakness and then buy the dip for strength. Again, very difficult thing to do, but if you can master that, you'll be a good trader. So again, the direction of gold will depend on stocks, I think. So again, bubble asset of everything keeps going up no matter what. So on the 4 hourly, we're really towards the middle of the range, but again, the trend I guess is still quite strongly up, even though we've seen this rejection, and this indecision, almost doji on the weeklies. But yeah, as I say, with the kind of bubble of everything's got a value. So there's so much money in stocks, so much money in real estate properties, so much money in gold. Why wouldn't gold keep going up? There's no fundamental reason for it not to keep going up now. There's no shortage of gold, I know that. There's no shortage of gold held in Indian women's jewelry boxes. Something like 20% of gold is in jewelry. So it's crazy to think that we've got some shortage of gold somewhere, so we haven't. So the price for me should be lower, but it's not. So again, I'm still selling highs and spiked into gold, but yeah, the trend is up. But as I've said to you a million times about being right at the right time, not right in direction. You don't make your money in gold buying here and selling here. I mean, you can do if you're an investor, you can do if you're a kind of a speculator of longer term things. But if you're a trader, you can just be buying, or selling high points in gold, and you should be making your trades every 5, 10, 15 minutes, throughout the day, several times, banking the money, take it off the table. You don't be doing is giving that money back. So, as I said, with gold, it will, again, obviously be dependent on the dollar. As the dollar goes down, gold becomes cheaper, so gold goes up. But realistically, how low can the dollar go, especially against the Japanese yen? Japan, zombie country, aging population, it's not going to get any better ever. So, this idea is a safe haven is nonsense. So again, this filling in this kind of like upward trend, but, filling down into the channel. So again, I'm just loading up on the dollar, looking for low points to be buying because the dollar's going to be back up here. And, realistically, I would say, finding good support, down at the 107, 108 level, and then, filling that trend in and going back up to high levels. And I see it being, back at 114. That's really where the dollar should be against the yen for me. And Fed are not kind of, caving into Trump just yet, keeping this idea that, they'll keep one eye on the coronavirus because that's got to be a way to cut rates, hasn't it? Because that's stimulated growth. No, it hasn't. So just utter nonsense. So there's better currencies to trade from a rate perspective. I would just say, the dollar being the world currency, just keep buying dips low regardless. It doesn't matter really too much about interest rates. So the pound, something I've called, pound against the dollar. Again, if you watch my Twitter feed, I called this before it happened. I've been saying nothing but buy the pound. So yeah, we got what we thought, but because the Bank of England said they were going to cut rates, I called that for being nonsense. Left the EU. So the EU's vote, the kind of world's voted that leaving the EU perhaps wasn't the end of the world. But remember, we saw this spike before when we saw the Conservatives get the majority, and then we spent the next 3 or 4 days selling back down. So don't be surprised if we see a gap open, the market sell back down. But again, that could just be profit taking from this big move that we've seen in the pound. So yeah, I mean, I think net for me, the leaving Europe and the UK now not having the Brexit excuse is net positive against the dollar. I think there's other currencies you could buy it against. But again, we've seen it go up very sharply, so don't be surprised if we see a big down move or over the next few days, some consolidation and profit taking. But I still think, again, for me, the pound against the dollar is a good buy. And, again, from the dailies, consolidating around this range, on the weeklies, we're still, relatively, kind of steady. This above this 130 mark has always been, kind of very psychological, and I do believe, we'll get back above, 140. And I think, the pound can only really strengthen from this point. In the kind of short, medium, and long term, because of they have no excuses anymore. And as I said, there's probably other currencies to trade it better against. And again, the New Zealand dollar one is one that I've pointed out a million times. I'm on this side of the world. I understand their kind of politics, or don't understand it, is probably clearer. But I know they're full of shit. So I've been calling the low in the pound against the New Zealand dollar for so long now, and your fibs have worked perfectly. Beautifully, 50%. Doesn't get any better than that. So again, we can see these tops being targeted, and if you go into the higher time frame, higher time frames of the pound against the dollar, again, consolidating nicely. But really, quite low. I would say, in the range still. We've been back at, nearly 3 against the pound against the New Zealand dollar, and again steadily down. A lot of then, kind of markets picking up, but then Brexit happened, smash, smash, smash. We know about Brexit now, in the range consolidating. So I would say leg higher and then a steady grind up back to these highs at 125, which would be great because I have a shit ton of pounds and I've been long for a long time. So that's what I'm looking forward to, and that's what I think. But again, I don't really, outside of this whole many long-term trades, it's more just about the short-term movement, which, again, the hourlies or even the 15 minutes, you've had bundles of consolidation and points to buy low and the market to break up. So that's it, really. Again, it's. I was explaining to a client today, an ex-footballer, of how to deal with the pressures of the markets and how to deal with taking all this complex, fundamental and technical, data and trying to put it into the basics. And for me, really, right now, it's yes. If this coronavirus is going to end the world, sell into sharp down moves, but don't hold on to it. And when you do see a good substantial bottom, buy a dip. But again, don't be holding, be in that trade for 15, 20 minutes, half an hour tops. You're just looking for those low bottoms and those jumps. Gold, sell high, because again, there's no reason why gold should be this high. It just isn't. No physical shortage of it. I don't think the dollar's only going to get stronger, and we've had all the bad news in the world we could ever take, Trump, Brexit, etc. So if gold was going to be really at true highs, it'd be above $2,000 now. S&P, same as the DAX, as I say, really kind of big, sharp open moves or any gaps. Sell into it quickly, but then get your profit out. Euro, sell it high. I think that's going to fare much worse than the UK will outside of Brexit. Remember, it's lost its credibility. It's lost the money that goes into the UK, and there will be some contagion. Yeah, there will be some contagion because we've still got riots in France, still got upset in Spain. Germany's having its problems, domestically and from a socialist and economic / political, viewpoint. So a lot of problems, I think, coming for the euro. So absolutely sell the euro high, buy the dollar low, because it's the world currency. And again, any pullbacks in the pound, I'll be buying because I think the pound's still at great levels now. And, any positive news from Boris and trade deals with the US will really have a big effect on that pound going up. So again, as I say, if you want to get my mentoring, you can. You can just open an account with Black Bull Markets. The link's all over my site, steveruffley.com, or get me on Twitter at Steveruffley. You'll find it all there. You get all the technical setups with the charts already done for you. So the yellow fibs are ones I've drawn on my own, but your basic fibs are the ones that will always come with iView charts, which is free. You open an account. So if you couldn't make money, selling the higher, the 50%, then you shouldn't be a trader anyway. But it tells you where to sell and where to buy back, so it's pretty idiot-proof. So again, hundreds of people using that all over the world. My mentoring is really what's going to take you to the next level. So again, looking for anybody with any amount of money to put into account, and if you do that, I'll give you my charts and time for free. But being realistically, anywhere between 10 and 25 grand is where you're going to be able to trade for a living and make some money. If you're a big boy and got 100k, yeah, that's when you're making your 20, 30, 40, 50 thousand pounds a week, which I've done with clients, and that's if you want to make the big money. So I'm kind of here waiting for anybody to get in touch, and whatever level you're at, we can work with and try and do the best for you. And you don't know until you try, but the only really way to do trading is to learn to trade real money, and to get that size up. That's how you're going to make money. All this idea of spending months on a demo and trying to learn that way, you never get the emotional attachment. So there we go. That's another live update. I'll probably do another one midweek. Anything you want to speak to in the meantime, just Google me, Steve Ruffley. I'm not a difficult man to find. All right, guys, we'll take it easy and I'll speak to you soon.